All right, so I'm Constantin Kogan. I'm your host on Holistic Investment, and it's my pleasure here to host today Ash Egan. Hi, Ash.
Hey, Constantine. Thank you for having me.
So Ash is a partner in Accomplice, and before he has a tremendous experience in DeFi and DLT technologies and blockchain, and generally a person who went through several VCs and started his own projects. And now it took us just full disclosure before I read a disclaimer. I just have to say it because this is going to be the cherry on the on our pie. But it took us only 1 hour to connect through Zoom, then try different other applications. So like we're excited to give you the best video experience ever. And I just have to read the disclaimer first. This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or any other advice. So now we are jumping straight forward to this.
We're live.
Yes. So you've invested in like projects like Balancer, Bison Trails, Coda, CoinList, FalconX. I mean, the list is long, right? Tell us a little bit about yourself, how you got into this industry, and basically what made you be interested in specifically the venture capital and arm.
Yeah, so just reversing a few years, my career in venture capital started in 2014. I really got into the industry because I wanted to start companies, and I looked at venture capital as an awesome way to just learn about, scaling companies, a variety of different industries. And what I quickly learned is venture capital can be a lot of fun. Another thing that I noticed is the more entrenched general partners around the country and at the top venture capital funds, they were investing in SaaS, consumer. There were certain categories and types of companies that, I, as a younger investor, was just never going to get access to. And so I started looking at these fringe areas. It was around that time, after reading the Ethereum white paper, the concept of smart contracts, putting value around transactions is what got me really excited. And so it was really in 2015 when I, put everything else aside and just went down the rabbit hole. And very different ecosystem we live in today, but back then, invested in a company called Chainalysis, Enigma, was at the small firm in Boston called Converge, and that's where I got to know the Accomplice team. In the interim of Converge to Accomplice, I went to Consensus to help co-launch the venture arm over there, and then 2 years ago joined Accomplice, and have continued sort of this crypto and blockchain journey, which is a very different ecosystem today than it was 5 years ago.
Yeah, that's a spectacular journey. I would say such a short period of time you've participated in, VC firms, and one of the biggest, I would say, infrastructure firm that helped with Ethereum community. And it's interesting to look at your perspective from a person who, as you mentioned, first started looking into VC space because you wanted to launch your own project. So what would you recommend, a person right now who's, let's say, watching our interview and want to raise money from a VC? Let's start from a reverse engineering process, what not to do, like how to avoid very, very simplistic mistakes, how to even communicate and add value, how to build, let's say, a pitch deck, what you need to take into account.
Yeah, I think it really starts with the passion. You can be the smartest person in the entire world, and if you don't have passion for building a company, it's just not going to materialize into something special. And so I think that passion has to start at the core, with the founding team. I think that you can't just have the mentality of wanting to start a company, because there's going to be so many hurdles, so many roadblocks along the way, that as soon as you hit your first or your second one, you're going to say, I'm done with this. So I think it's first off figuring out what your passion is. And then I think secondly, surrounding yourself with people that can share that vision and, running a company, especially from the earliest stages, you want to be able to lean on in some team or solo founders, and some of those, there have been glowing successes. There's no one way to start a company or anything like that. But I do think just the passion and the team in the earliest days are the most important things. And we can get into, the opportunities, how you address it, go to market, all that stuff. But I think just starting there, that's, probably 80% of the most important pieces.
So is there an absolutely like a list of some of the basic mistakes that you have to avoid? I'm sure you've seen like hundreds of different pitches, right? And there are some silly things that, people just didn't have experience and they still write them. And you've seen those patterns where people repeatedly do those mistakes. Maybe you can talk a little bit about it.
I think there are common mistakes that I may see, whenever I probably look at thousands of pitch decks every year, probably more than that. Like, there are common mistakes like making spelling errors, not being able to communicate the vision, having a rocky relationship with your co-founding team. I think there are a lot of things though that you're just not going to get everything correct from day one or day zero. Like, a startup's journey, especially in crypto, is the last thing from linear, right? It's super rocky. You're going to change your strategy. You're going to change how you think around distribution. You're going to change around, how you think around partnerships and all these things. But I think there's some common things. You want to have done your research. Like, for me, if I can ask about a project and I know, significantly more than the founder, to me, that's a red flag, right? If there are things that are happening in the market that I'm sort of, seeing and they're not addressed or, brought up as either opportunities or potential hurdles, like, that's another red flag. The typos, sort of like the pitch deck. You want to know who the players are, right? Like, who you're competing against. In an ideal world, you're creating new categories, you're creating new behaviors. It's tough to do, but I think a thorough understanding of the market, understanding, how your protocol or company can play into the mix of things, to me, is extremely important. But yeah, the list could go on for days.
You mentioned something very interesting in terms of the hurdles. So one of them is like presenting the vision, right? Is there any practical advice how you help people to do it in the best way possible? Because we all know, we've seen like pitches, like, there's one page, like, values, the mission, like the goal of the project, and that's all, so maybe you've seen some great examples that helped you to like immediately grasp that, okay, these guys, I actually like think that they understand what they're talking about.
Yeah, I think the way I think around it is there's sort of two scopes. There's pre-product market fit, and then there's post-product market fit and sort of land and expand and iterating on new products. I think before you get to product market fit, you just got to test a lot. You got to be iterating at a super rapid pace. If you have an assumption on a product that you think the market will want, and you find that there is absolutely no interest, it's time to iterate, right? I think throughout all of this pre and post product market fit, to me, the most impressive founders have a vision on what the future might look like. And that is the 7-15-year journey. These things don't happen overnight, but I think the most important thing is figuring out, okay, how do you get to product market fit? And it doesn't need to be millions of customers or users or anything like that. It can be, DeFi is still small numbers, it can be 1,000 super high value type customers. But I think the ability to understand when to iterate, how to iterate, but ultimately getting to that product market fit is just so important in the earliest stages of a company.
100%. And have you seen some of the good examples and the way people articulate it in a document. Because one of the biggest challenges for entrepreneurs, though, the way I understand, I've spoken also with hundreds of different people, that they don't even know how to properly address it like the first time. Meaning, like when they send this like email, when they like, you know, they're still hesitant, like, you know, they don't know, like, you know, what to expect from a particular VC, right? And they want to articulate it in the best way possible. But, you know, every investor is also different. Their expectations are different. So maybe you have some other, like, you know, advices, like for the first communication, whatever it may be, like Guy Kawasaki rule, like, you know, like under the 20 slides on your pitch deck, and then executive summary of 1-pager. Like, would that suffice to have a proper communication with you first time, and then you would contact the right contester like yourself?
I think everyone has their own style, and no entrepreneur should be forced to conform to one style. As an investor, like my approach, I'm a person driven. You know, there's certain people who I would back on, you know, whenever they start a company, I will back them any day of the week. And then I'm also sort of thesis driven. So I'm looking for something before it probably comes knocking on my doorstep. If it even does, maybe I have to do outreach. I think as an entrepreneur, if you're going out and building something of value, investors are going to come, right? But I think you do have to have this vision close to heart. And just to go back to sort of, you know, the examples, a few examples of this within the crypto sphere, you know, with Bison Trails, Joe Luz, and Aaron Henshaw, you know, they saw that the market was shifting towards proof of stake. And, you know, the thesis there was who's building out the infrastructure to support these proof of stake networks for the teams, for the token holders, you know, for the exchanges, ancillary partners, and they build out that infrastructure. And, you know, now they're well beyond product market fit. It's sort of land and expand. I'd say similar with balancers, similar with Chainalysis, similar story with BlockFi, but they've all approached it, and, you know, the list goes on, but they've all come at it with a very different angle in terms of the funding, you know, founding team, the company formation. But I'd say, you know, for those specific companies and protocols, you know, they had a vision about what could be, and, you know, you're not going to be able to build it all in day one. Rome wasn't built in a day, but, you know, they sort of, they've chipped away. Then, you know, now all of those companies are in pretty incredible spots.
So you would invest in a project where you see a founder who you trust, and you believe that this person or like team that they can actually go and execute, but they might not even like found yet the product market fit. Entirely.
I've invested in white papers. I've invested in products that have pivoted, you know, and sort of found their success in second or third iterations. I think one of the most important things for founders to have in mind is like understanding their own superpower. You need a superpower, and, you know, that could be you're an incredible engineer, you're an incredible communicator, you know, you're an incredible salesperson. Ideally, you have a few of these things, but where you don't have those skill sets, you know, you're being complemented by other team members or founders, and, you know, being able to leverage those skill sets. And, you know, because the battle's always going to be uphill. There are always going to be incumbents. There's always going to be existing behaviors. How can you take those superpowers, translate it into product or service that will, you know, potentially get mass adoption?
That's definitely like very exciting what you're saying in terms of how people should battle, like, you know, till the end, and basically try to make sure that, you know, that people like you who are investing their trust, you know, like they're also like understood. And my question is basically, how would you support, like, imagine that you already invested, right? So tell us a little bit, like something that happens, like, you know, behind the curtains, you know, like behind the scenes, you know, how you actually work directly with the project that you already invested in.
Yeah, and so I think it's going to vary every time. I'd say my typical role is outsource biz dev, recruiting, you know, hiring. helping out on strategy, helping out with future financings, product, and I think it's also dependent on what the founder's skill set is. So, for our base layer protocols, a lot of teams like Coda, teams like Flow, Near, Luna, a lot of these teams are looking to build out an ecosystem of applications. They're looking to build out their partnerships. How can I, as an investor, help funnel, very attractive projects their way? And I'd say my role as a company matures is going to be very different from, day one. But and in terms of, the how often I'm touching base with these founders, I'm sort of like, look, I'm here as often as you want me to be. I will be, your third team member if it's two founders. I've played that role before. Other founders are, they're serial entrepreneurs. They don't, they want their investors for advice.
That's definitely like important when investor is an active participant in the game. Like you're not just passively give the money and that's all. Like maybe introduce to some people and then offer connections. But I think what you're doing is a very very interesting model where you actually become like almost like a full member of the team, right? And sometimes when it's needed, of course, right? So the question is like, do you typically take the board of directors seat, or sometimes you just you're just there for the project and you don't need like special care or special attitude, right? So how do you position yourself from time to time? Maybe give it maybe 2 examples if possible.
Yeah, I like to be heavily involved with projects, whether that means I'm on the board, a board observer. Like I think a lot of times ego and nomenclature can get in the way. I think, in the earliest stages of a company, a board can actually present more of a time suck than actual value add. But I see, as soon as I put capital into a company, I'm going to be hyper involved. And again, that's as, can be steered and directed however founders want. And, I think with Bison Trails, they were looking to partner with the top protocols, and, having spent time at Consensus, having been in the space for a few years, a lot of these teams are friends of mine, or, it's sort of 2 connections away. And so, did a lot of that early on. With Balancer, we've thought a lot about strategy, sort of product iteration, partnerships, and there's with the Near guys, it's similar. I think we can look across the entire portfolio, and it's obviously evolved from the day that cash was initially invested. But you'll constantly see me on these Telegram groups, on Discord, shooting out emails. I feel like there's always more things you can do, and it's exciting seeing these companies mature and not taking a back seat, but maybe not being there as almost the third co-founder from day one.
So another question which is interesting to understand, like your investment thesis, right? So how, I'm sure you have some kind of strategy, like on a bigger level, like how all the different projects they fit together, like they accomplish each other, whether it's an exchange, it's an aggregator, or it's probably custody, or some some layer 1, layer 2, other layer 1, layer 2 solution. So maybe you can help to understand, like, would you invest in a company that, let's say, take an example like an exchange, right? If you already have in your portfolio an exchange, would you invest in another one? And if yes, why? If not, also why?
I'm very sensitive in investing in competitive things. I think in a industry where we're still in the early days, sure, Bitcoin is 10 years old, Ethereum is 5 or so years old. But the reality is we're still very much so in the early days of, that sort of like this new asset class, whatever we want to call it. So my role, I think I can provide the most value when I don't have, conflicting founders and all these things. That said, I have an idea of how the stack will break down. In time, we will see how it evolves. I published a piece on, market mapping the crypto stack. Published a piece on aggregators, the liquidity layer, and then there's the thing is, the stack isn't fully formed yet because we're still in the early days. The tooling's still getting built out. Sort of layer one scaling. A lot of these things are being actively worked on, and so you don't want to get too far ahead of yourself in terms of being entirely thesis driven. And that's sort of why I take this approach of sort of having an idea of what I think the future may look like, or having an idea of what I think the stack is today and how it could evolve. But I also complement that with being very oriented on where are the most talented people flowing. So last year I published this piece on crypto mafias, and it was broken down in 4 categories: academia, Wall Street, tech companies, and crypto companies. And it was basically looking at where are all of the companies coming from. And so I have not yet published the 2020 version. It will come in the next few weeks, but I have a Google sheet that's basically whenever someone starts a company, or when someone spent enough time at a company, sort of get the feeling that they might start something new. These are things I'm tracking, and so my approach has been to layer on that sort of thesis-driven approach with being sort of tracking highly valuable or high potential people. And look, there's always going to be outliers. That's the name of the game. But that's sort of the framework that I've gone with.
And do you prefer to take a lead-in role in the investment round, or are you also happy to share with other investors to diversify your risk?
Accomplice is we are a generalist fund. Crypto happens to be a sector that we're super excited about, but we do cybersecurity, consumer, enterprise software. And I think because we are a generalist fund, we can play in the sandbox with almost anyone. We've worked with crypto native funds, corporate funds, obviously traditional venture capital funds, crypto hedge funds. I think we've probably worked with almost, every firm that's actively investing within crypto and blockchain. And so, when it comes down to if an entrepreneur is thinking between, there's these 2 or 3 crypto native funds, and then Accomplice that, they can help out with recruiting strategy. Maybe they want to tap into that sort of more generalist portfolio. I think we can play super well in the sandbox with anyone. And, I think I enjoy taking the lead investor role, co-leading. I've taken roles where it's, just putting in a check, but I think the preference is typically around, co-leading with other firms that we've worked with in the past.
Oh, I see. So basically, you're happy to enter any stages, but as I understand, the preference is an early stage, right? Seed, Series A, right? And sometimes even pre-seed, right?
Correct. Yep. Seed, Series A. They call, we're calling this area pre-seed now. I just call it all early stage. It's all just early stage investing.
And in terms of the ticket size, right? In terms of the checks if you're comfortable to share, right? What are the typical checks you're writing? And is there any other information that you want to share in terms of the general rules that how would you enter the deal? If you can share.
Yeah, I think we're flexible. I think at Accomplice, it's been probably 500K on the low end in terms of check size, and probably 5 million was the largest initial check. And it ends up averaging out around that $1.5 million range. These things vary, but that's the typical range in terms of where we're playing. And look, if an entrepreneur founder is thinking about starting something, I try to be very accessible. So even if it's just brainstorming, there are a few folks that I would love to back that I do pretty consistent brainstorming sessions with. So always happy to have conversations around anyone who's thinking about starting something in this space.
And right now, you mentioned that as a generalist fund, you were also involved in different sectors like cybersecurity, SMB, like different sectors of eSports. So do you see, in particular, if you're taking the crypto, do you also see like certain angle that is your sweet spot, that you like currently your preference?
I think, yeah, I sit in on the partner meetings on Mondays and we talk about all types of companies. Crypto is just so exciting. Like, I think ultimately crypto will touch everything. Company stock will be crypto essentially. And, maybe eventually a lot of these companies will build atop decentralized networks. I think that will take time before it happens. But I think within this space, I've been fascinated by decentralized finance, DeFi, for some time now. I think that there will be probably a few massive winners with huge network effects. And then, right now, I think we're just beginning to see what may come of it. It's just so much activity happening within that space. That said, I think there's going to be a number of other businesses that are built atop crypto networks that, maybe the users don't even know it's crypto, or, built on Ethereum or built on Near or Coda or Flow under the hood, or, any of these other protocols. And so, I think that's another chapter that I'm quite excited about. I'm constantly looking for, what are companies that can rise with the tides as crypto gains adoption, whether it's from institutions, retail, enterprises. And there's going to be a few of those as well. And so, I think we're still very much so in the early days of, this application suite. But, within that, decentralized finance, I think, is by far the most exciting, at least, today.
So this is, I would say, natural transition into DeFi topic, right? So if you were to talk about your perfect stack and the best product market fit between the DeFi project that are currently in your portfolio, maybe you can give some great examples which actually like literally inspire you, and you see the huge future, like maybe unicorns in the future, as you mentioned.
Yeah, so I think DeFi, one of the reasons I think why DeFi has been one of these early emergers, achieving product market fit atop decentralized, crypto networks, I think it's because, behaviors that were historically only accessible to a select few, you look at Wall Street, market making, creating ETFs, sort of all of the, getting very cheap loans, whatever it may be. A lot of these things have historically been only accessible to, particular banks on Wall Street. With decentralized finance, and I think, the masses look at that and are like, why do we not have access to that? Just we can talk about, Balancer. They've sort of flipped the model on its head, where as a liquidity provider, you can get paid transaction fees. You can make fees from trading revenue, and then you can be a user, over the top and get the most attractive rates. Depending on the ERC-20, eventually will grow into real world assets and all these things. But providing liquidity, market making, and accessing sort of like the best rates for trading, like that's not something the average person is exposed to. So that's just one example. And I'd say there's other particular areas within DeFi that I'm spending a lot of time thinking through. Back to sort of the comment around not doing things that are hyper competitive or sort of butting heads. I'm just very particular on doing my research, ensuring that, these are the types of founders I want to back before, deploying. I don't want to invest in 20 things or 40 things in a particular category. I want to be very selective on these things.
But in the DeFi space, is there any focus right now, or particular, I would say, thing that fascinates you? Do you see I'm sure you're researching tons of data every day, right? And
It's interesting to understand your perspective on things which you believe they're gonna, they're gonna come out like maybe by the end of the year, maybe next year, or in 2 years, as big winners. Something that will actually chop off the big portion from traditional, let's say, financial markets, because there's a lot of application in this particular sphere. And you see some of the solutions are actually becoming so robust that they're going to replace traditional alternatives.
Yeah. I think about it less as replacing traditional alternatives. Those are nice frameworks to have in mind, but I also think around like creating new experiences. I think within crypto, usability is still making these things, beautifully designed products, things that, are super easy to access. These are so important. Taurus, I think, has done a great job around that. I think insurance and smart contract insurance, but there's hacks, there's still attack vulnerabilities, and so companies like Nexus Mutual and Open are doing fascinating things on that front. And then I even think that companies, I wrote that piece on aggregators. The next piece I'm working on is this term curators. What companies are taking all of the things happening in DeFi, packaging them up and delivering it in a beautiful way to customers, around the world. I think that's remains, unsolved. And I think the fintechs are looking at it and saying, hey, we want to do that, but they haven't building on an entirely new infrastructure, and they're going to scoop up a lot of these companies. But I look at that as such a massive opportunity, just like wrapping up these products and figuring out a way to deliver them in mass. Information markets, another fascinating area. But, I think it's also, you think around, Mark Andreessen's comments of, what are the applications that are going to get built on the internet? Honestly, it's hard to say what might be ahead of us. Even with Ethereum, Vitalik had an idea of, what would have gotten built on Ethereum, but he didn't predict the ICO boom. He didn't predict DeFi. It's sort of, who would have known it happened in this order? NFTs, there's so much exciting stuff happening there as well. So I think it's important in this space to stay humble, do a lot of reading, talk to a lot of people, and figure out where the market tailwinds are. Go from there if you're a founder.
Yeah, I 100% agree with you, because there's a lot of people who predict things and they don't happen, and that's kind of that's tough. So I actually really appreciate your approach, not predicting anything, but at least provide an honest review of what's happening right now. Now, if we're talking about the new base layers, the things that are created as the new sandboxes, for developers versus different Ethereum solutions that we mentioned, do you see some of the different opportunities here, or you think that layer one solutions are no longer that nobody's touching them, they're going to exist as they are? We're going to talk about more layer 2 or layer 3 solutions.
I think that unless you're Facebook, the layer one, we've invested in a few layer ones. They all have very different approaches. I think that each one that we've invested in will create a new sandbox and a new set of developers who will contribute to the entire crypto blockchain ecosystem. Those teams have ideas around what applications might get built. The Flow team, they've done so much around NFTs. Dieter Shirley, the CTO, actually authored the ERC 721 standard. I think they have some fascinating IP partners. There's going to be some really cool stuff that comes of it.
Okay, so I'm sure you've come across a lot of, I would say, comic situations, it's closer to satire, especially in this industry, right? So can you share some of the funny stories, or maybe the funniest story in your experience?
Funny stories, so many. 2017 was just a wild time. I think a few of my favorite anecdotes, one, I think 2017 at Blockchain Week in New York, you had all these Lambos parked outside, fast forward the next year, it was all, Jeep Wranglers, still nice cars, but, not the success of 2017. Crypto is great in a bunch of ways. I met my girlfriend at a crypto conference in China, 2 years back. And, I don't know, just it's been a fun journey so far. It's both my personal life, professional life, and, what I do nights and weekends as well.
No, brilliant. And I'm aware that you read a lot. And what would be your top recommendations for the reading? It might not be exactly in the crypto space. Maybe you can offer some of the traditional reading that will help people to better understand and to get an entrance to this industry.
Yeah, I just finished reading the Permanent Record, Ed Snowden's book, and I found that absolutely fascinating. I'm reading right now Codebreakers, which is about the battle between cryptographers and codebreakers, dating back thousands of years. And, you'll find in certain periods of time where, encryption is, far better than, the attackers. Other times you'll find that, the folks that are trying to attack these algorithms are actually have the upper hand. And it gives sort of a history around, dating back to, I think, 2000 BC or so. But, those two books, one an autobiography, another more anecdotal, but, talking about this sort of shift in terms of power. To me, those two are phenomenal. I could talk about all these crypto books, but I'll leave it at those two.
And no, sure. That's I will share the links, and I will share your amazing articles, because I think your articles in Medium are very profound, and they can help people to to map out literally better how the entire ecosystem right now is working. So I'll definitely share that. And the last thing I will ask you probably is do you recommend to follow some other blogs or people that you personally follow every day?
I read everything. I mean, now it's hard to keep in touch with all that's happening. I think the Crypto Canon blog by Andreessen Horowitz is a great place to start if you're looking to just do a deep dive. I think Chris Berniski has done some awesome stuff around valuation work in this space. I love Linda Xi's intro to crypto assets. She wrote it almost for every asset, dating back 2 or 3 years ago. I think there's some awesome stuff there. There's almost too much content to sort of stay in touch with on a day-to-day basis, but always looking for more. So I'd say the best way to learn also is writing your own stuff. You only get better by reading and writing and sort of putting together your own theses. So I encourage more folks to, enter the space, critique it and write about it. So exciting times we're in.
Yeah, no, I appreciate your time, Ash. And besides all the technical difficulties, we still made it, which shows that you're a real fighter. And I wish you great success in the projects, and I wish you that with such passion you will support more great entrepreneurs. And I will leave the links to your Medium profile, to your firm, and anyone will now understand how to pitch you better and how to engage with the best in the industry.
Do my best. Definitely not the best, but yeah, no, this is fun. Thanks so much, Constantin.
Thank you, Ash.